market breadth indicators. Remember, at the bottom, I told you we were in single digits with stocks above their 50-day moving average and 20-day moving average. And with the fear greed index, we were at readings of 3, 4, and 5 in single digits. Kramer and the herd, Kramer and the bears were bearish, telling us we were going to crash, and the herd said, yep, that's got to be right. We're very depressed, and they were very, very bearish. We're bottoming based on these signals. We're forming this divergence. Again, it may not be done yet. If we try to hit the upper boundary of the rising wedge, I don't know that we do that. Last week, we could see a peak going into Fed meeting or the launch of Trump's tariffs here. I think you're going to get a sell-off and likely a peak before August 1st. I don't want to rule out that we don't hit that upper boundary of the rising wedge. That's still possible. You're forming a top right here. I told you, go to new highs, and I was going to look for a top. We went to new highs. I'm looking for a top. I haven't called one yet, but I'm looking for one. Maybe we got that today with that black candlestick on the S&P. Possible. Start seeing evidence of it. But these are warning, hey, we're going to get a sell-off at some point. We're up 32% since I called the day of the bottom. NASDAQ's up over 40%. Stocks above their 20-day moving average. The same thing. You got this multiple point divergence developing. Maybe it's done, maybe it's not, but a good shot. It's either finished or about to finish. And again, we had single digits down here when I called the bottom. Now you have this divergence, which is what I told you to be watching for. I told you we were going to go make new highs. We did. This move was corrective, and the bears were completely wrong, being a bear market rally, which I told you that was a bunch of poppycock. People that were telling us we were going to crash over here, the same people are now telling us we're about to crash here, and they're going to end up likely being wrong again. You're going to pull back, go to a new high, and then I think you're going to get the real top. Bears will throw in the towel, and the herd will be lulled into a false sense of security and believe a top is possible. Sell-off. They're easily duped because they base everything on their emotions. I warned you about the equity put-to-call ratio. We have this divergence in the most recent price action. We have this larger divergence with the May peak. Again, this is very similar to what we had at the February top. We had a divergence there, similar to the most recent price action here. Red line's a 5-day moving average of the put-to-call ratio. The gray is the raw data suggesting we're in a topping process. At the April bottom, we're getting a spike on the put-to-call ratio suggesting a bottom. I was calling a bottom with the single digits with market breadth indicators, fear greed index, seeing horizontal support, and all the rest of it. At resistance levels with some of the trend lines I'm showing you right now, just underneath them, or boundary of the rising wedge, while we are at major support down at the bottom. My risk-reward model for the S&P 500 is suggesting that we're forming a top, forming negative divergences at extremes. The NASDAQ risk model is doing, the risk-reward model is doing the same thing. It's barely rolling over this week. Remember, NASDAQ is backtesting the trend line in the weekly time frame. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, like the indicators, please let me know that by supporting the channel today. It takes a lot of time and effort to do with this, and if you could just take a moment to follow the link below to take you to a secured site, donate any amount you want. Just ask that you do that rather than try to sell you stuff with sponsors, but I need to hear from you in order to make that work, so if you could take a moment to do that, I would deeply appreciate it. Signals have just been outstanding. It helped me. Like that kind of information, please consider partnering with me and supporting the channel today. NASDAQ, testing this trend line, and let me just, by the way, we're at extremes with our stochastic here, but here in the weekly time frame, but from the low, the higher low here in 2023, we're right at that trend line. We're back testing it, slightly overthrowing the trend line. So something I'm watching. I'm also watching that if we do pull back, do we go overthrow that level even more and hit the trend line from this peak here and this peak here, which could be pointing to the next highs. This is our log scaling for the NASDAQ. A little higher is the trend line with our linear scaling, the channel. And as what I'm watching here is, do we pull back and then go up and eventually hit that peak? And it's coming in very close to the level I just showed you on the other chart. Our log scaling, and do we completely push higher there and the cycle top? I think that is very likely. We're just a few months away now from seeing a peak in the market. I do think we're putting in a short-term top right now. Within the next few days, then I do think we'll go higher. So fear greed index is at greed. And again, it hit extreme greed. It's making a lower high, and it's diverging with the S&P 500. Think about this over the weekend. It's diverging with the S&P at extremes. In red, I have the S&P 500. In blue, I have the Fear Greed Index. Again, you can see the diversions between the two since the since the July 3rd peak. They're diverging. I've talked about this setting up with the awesome oscillator, the RSI, the MACD. We've talked about this at great length and detail. Now you're seeing it here on the Fear Greed Index. This is likely going to produce a sell-off. And then the S&P will probably go make one more high and even form a larger divergence than what we already have right here. On the EU deal, fizzled out on another tariff announcement, but again, the Dow ended up fizzling out. We ended up down 64 points. The S&P ended flat, up just over 1 point, 6,400, just above 6,400, and then turned down off of it. Probably going to see about a 400, 500, 600 point drop on the S&P 500, go to new highs and probably top out later in probably the seasonality out and sell off in July, get the or sell off in August, pardon me, probably go make new highs by September or October, and then probably top out. The NASDAQ was up 0.33%. The Russell was down 0.19%. The VIX was up 0.67% to close just above 15. Sunday, Trump announced the EU deal. This was a good deal. This actually is a very good deal, very similar to the deals we've recently seen. We had a really good deal there with Japan. This removes the tariffs from the United States. There's still the goods going into the EU. EU still has their value-added tax and a couple other hurdles. So the United States is putting on the 15% tariff. And as part of the deal, there's an agreement to purchase $750 billion worth of energy, an investment of $600 billion worth of, an additional $600 billion worth of investments in the United States above current levels. There was a pause with negotiations with China. You got more people out there saying, oh, Trump's a taco. He's going to pause these tariffs August 1st. I doubt he's going to pause the tariffs August 1st. And then we had Trump say on these countries that haven't negotiated a deal, there's probably going to be a baseline tariff of 15 to 20%. So the rates of the tariff letters that went out were higher. See what all this, all this plays out and what the final numbers are. I keep telling you over and over. There's going to either be deals or there's going to be tariffs, one or the other. The market's off on this because, again, the herd doesn't believe that the tariffs are going to happen now. Trump paused them before. Negotiations are coming to a conclusion now with this EU deal and the Japan deal and some of these other deals we've seen announced. Some of the bigger countries along with the EU. August 1st date is likely not going to be delayed. I keep saying it over and over. This date is going to be associated with the top, as we've had a 32% move higher since I called the very day of the bottom at key support, at the rising trend line. Again, I talked about these levels on the weekly chart over and over again. And I told you before we had the bottom going into it, when everybody was saying, we're about to crash, we're going to have Black Monday crash. Kramer was saying it, and the bears were saying, yeah, we're going to die. The media was telling us we're going to the next Great Depression, and I told you we were about to bottom. And then when we hit the support on April 7th, I called the very day of the bottom, and I had several bottoming signals triggered on the 7th, 8th, and 9th. I talked about that at the time. We hit key support. I told you the move is corrective. Bears needed a 5-leg push down. We had a 3-leg push down. And I told you we were going to go make new highs. I was mocked and laughed at for daring to be so stupid to think that. And yet I was correct. I told you before the tariffs, a week of the tariffs, when we were selling off here, I told you the tariffs were going to create a bottom in the stock market. They're going to go and we're going to rally to new highs. And there was going to be a pause or a reduction of the tariffs, allow for negotiations. The media was telling us there's no way that's going to happen. The bears told us no way that's going to happen. And I told you correctly that that would happen. And gee, here we are. I was correct. The media told us no deal is going to happen with China. No deals with Japan. No deal with the EU. China's never coming to the negotiating table. All this, there's everything the media and the bears have said, the complete opposite has happened. Everything I've told you has happened. Everything I've told you has been 100% correct, that the tariffs would produce a bottom, that we would bottom, and we go and we rally to new all-time highs. Just as I told you, the April 9th launch date would be associated with the bottom. Go rally to new highs. So too, I'm telling you, this date of August 1st will be associated with a top, a short-term top. Then we'll rebound back up and we'll likely one more push higher for the final climax high. Again, this whole move is the final phase of the blow off top, and you'll get that final climax high going likely to the next couple of months after the pullback in August. And then you're probably going to see a top in September or October in all likelihood. Everything I've said is stuff for the market to digest this week. After the bell on Wednesday, we have Meta and we have Microsoft. Meta's at overhead resistance. Microsoft is at rising resistance. Both of them are at an interesting point of resistance on the charts. That'll be right after the Fed meeting on Wednesday. And then Thursday, the day after the Fed meeting, we're going to get Amazon and Apple after the bell. So some important earnings and a lot of big names reporting this week. Two big earnings after the bell on Wednesday, after the bell on Thursday for Meta and Microsoft, and then Amazon and Apple. Magnificent seven stocks. Wednesday before the Fed announcement and press conference, and later the Meta and Microsoft earnings after the Fed, we're going to have, before those events, we're going to have the private payrolls, expected to be 64,000, and we're going to get the GDP for the second quarter, expected to be 2.3. You may recall that we had that negative number the last time around. Fed was off by 2.4% in their prediction. They were expecting GDP to come in at nearly negative 3%. And it came out at negative 0.5%. We're way off, as the Fed always is, usually clueless about the coming recession that's getting ready to happen. Actually, you're going to see these negative numbers. We don't have to have negative numbers to go into the recession. You didn't have it when we went into the recession in 2007. You didn't get it until much later in 2008. Other times it starts showing up before the recession. We'll see what happens this time. We were told, oh, that was curtains for the market. Market shrugged it off and closed positive. Way up, the bears kept telling us, oh, it's a bear market rally. Wait till we get the negative GDP and all these other things. A downgrade with Moody's. We had a bottom in April. Get this rally, and I told you all the way up they're going to be saying it's a bear market rally, and then we're going to go make new highs. They're going to start screaming at the top of their lungs, double or triple top. Based on the December, January, and February, based on the December and February peaks with our current peaks. That's what they're doing right now. This number, we'll see how it comes in. Come in weak? Does it come in strong? Does it come in positive? Happens. And then we'll get the rate decision again all over the social media, largely in crypto circles. Oh, the Fed's going to start cutting this meeting. Trump went and visited the building with the renovation, and Powell on the back, and he hopes he lowers rates. Trump saying earlier last week he feels Powell's going to go through with it. And again, I think that's wishful thinking on Trump's part. Powell's a Keynesian, terrified of Trump's tariffs, that they're going to cause inflation. I'll see the Fed lowering rates until they panic, and I think we're going to go up and we're going to sell off. We're going to go make new highs, and then we're going to see the market drop, get a much bigger drop than what we witnessed from the February peak. Drop 21%. We're going to get a drop probably back to those levels after going higher. That's when the Fed is likely going to panic, and that's probably in the coming months ahead. I think that you've got a couple months left here. We'll pull back and then we'll go higher. I think you could see a peak in September and October in the market. For the market to digest, a GDP Wednesday before the market opens, the ADP private payrolls, the Fed meeting, the earnings after the bell on Wednesday, and then after the bell on Thursday. Then we have the PCE inflation data on, Thursday? Yeah, Thursday, the PCE inflation data. Remember, the CPI ticked up, the PPI inflation turned down. We'll see what happens here. But the PCE year-over-year headline number is supposed to go higher, 2.5%. This is the Fed's favorite gauge of inflation. It was supposed to be higher than the 2.3 previously, and then the core year-over-year is supposed to come in at the same level at 2.7. So we'll be watching that. This to digest and or does Powell end up resigning or not? Who knows? At Trump's tariffs come Friday. And also on Friday, we have the jobs report coming out on Friday. Now, the jobs report is supposed to be at 100,000, previously at 147,000. Eventually, again, as we go into recession or as we move into recession, you're going to see negative numbers here with the jobs report. Eventually, that will happen. Already seeing a deterioration in the labor market in that there are fewer jobs created on a year-over-year basis. So earnings, the Fed, inflation data, the GDP, jobs report, just a lot for the market to digest this week. And then we have the tariffs kicking off with the launch date on August 1st on Friday. So I told you, I think there's a very good chance the market will peak before then. Signals remain bullish. I expect they're going to turn, but I told you again down over here, we were likely going to make new highs. They started to turn, momentum here, but my trend signals remain bullish. I told you if my trend signals turn bearish right there, I was going to be wrong about the new highs. We get a sell-off first. And I told you if we saw my momentum signals turn back to bullish, then I was going to be right about the new all-time highs. I predicted down at the bottom that we'd get that immediately. I told you we'd blow past the 200 period or go up to it and pause, blow past it, which is what ended up happening, and eventually make new highs. As I told you, there'd be a bottom here with the launch of the tariffs. I'm telling you, there's going to be a top here surrounding the launch of these tariffs, but I think it's only going to be a short-term top. I told you back over here, divergence that's set up to be watching to see if we get green bars up the 20-period moving average and end up forming a larger divergence. We got it right here. But then we went sideways. We peaked on July 3rd, and we went sideways up until last week. Then we had that breakout. We've got a rising wedge going on, and again, told you to watch for more green bars. We try to form those divergences on indicators, which is now happening, turning back up on the MACD. We're doing that today, and we've got these multiple point divergences. I've talked about these divergences at great length and detail. These divergences will likely lead to a bigger pullback, probably 400, 500, 600 points on the S&P 500, probably down between 5,800 and 6,000 somewhere near our 200-period moving average, which is currently coming in at 5,890. Going to go just above it, to it at the 5,890 area, or just below it, likely in the 5,800 range, maybe as low as to try to go to gap support or fill areas that we've talked about. Regardless, these will eventually give us some kind of pullback, and I think that the advance will resume. Because the advance is going to resume, we're going to sell off, and then we're going to see the dip bot. It's going to lull the herd into a false sense of security. Get the top, they're not going to go, oh, gee, it's a top. Like right now, they're not going, oh, gee, it's a top. They're going, oh, Trump's a taco, and he's going to pause the tariffs, and we're going to just keep going. We've had a breakout to new highs. Go up to new highs, they're going to have the same complacency that they currently have right now, because that's what the herd does. That's why they are my best indicator. Same thing with the NASDAQ. Again, we're still getting red bars, even though we're going higher, and we're getting warning candlesticks, candles of indecision, and black candlesticks, and these warning signs, and we've got these divergences. These divergences are going to play out. Oh, just haven't seen the sell-off yet, so it's not going, the herd always does this. If it hasn't happened already, then it's not going to happen. Why these people end up getting rug pull after rug pull done to them because they're oblivious not to get a reality check with the tariffs not going away. The negotiations are coming to a conclusion. Countries will either have a tariff rate or they'll have a deal, one or the other. This is what the herd doesn't understand. The rally up into the July 3rd high, and we started going sideways. I told you sometimes the seasonality is right, other times it's wrong. It was wrong back in March and April. Seasonality right in that we're coming up here in this rally. We have been going sideways until last week. We were going sideways from July 3rd up until attempted breakout before last week, and then last week we had that rally on the chart. We're probably going to see the seasonality be correct, and we're probably going to see a sell-off in August. See if we get a rally at some point, a bottom in August, and a rally into September, towards mid to late September. We'll see if the seasonality continues, but I told you divergences might still develop if the seasonality played out, which it ended up doing. Here it is. We have the rally. We started to rally late June. It was the 22nd there, and we started rally. We rallied into July 3rd, and then we went sideways. Week and a half ago, we tried to break out at the topping tail, and then came back down and ended up back testing that. And then last week, which again, the red bar was Friday, the topping tail was on Monday. Broke out, back tested, and then again we saw this rally, and then that continues on into today, start of this week. On sideways up until last week. Topping tail, that candle was negated, canceled out, as I told you, because we bounced off the 10 period and we moved higher. We still may try to go up to this upper boundary of the rising wedge. I think it's possible that that still happens, but very well could have a top day or the Fed or with earnings and failed to reach that level. We're topping. And I remain short this market. I went short Thursday near the highest of Thursday's session. Had a tight stop in, got stopped out on Friday. Short went short near the highs on the Friday session, towards the end of the session there. Added to my positions today because I think we're going to sell off and get this wave 4. The RSI is signaling caution. It reached a peak at 76.61 and it's turned down a little bit off those levels. We are moving above this peak here at about 75.5. We are moving to a new extreme. The extreme could mark a top, much like the extreme down here marked a bottom. There was no bullish divergence at that bottom in April. I pointed that out at the time. We got the MACD histogram turning back into positive territory today. So again, remember I talked about this forming a divergence in the most recent price action and a larger divergence from the peak in May. Multiple point divergence, a triple divergence, quadruple. We had a divergence right here that gave us a small pullback to the 20 period moving average with the lower high that's set up in June right there, and that gave us a pullback to our 20 period moving average. Then we got another rollover here that gave us a sideways move from the July 3rd high, and now we're getting another reference point of a divergence. It is multiple point reference points of divergences that produce reversals. And this will likely be a reversal for the short term, a larger pullback, if you will, rather than some of these smaller pullbacks that we've had along the way higher. But we have to break the trend line. We have to take out the 10 period. We have to take out the 20 period. We have to break the momentum cloud if we're going to start moving back to the 50, to the 200, to the cloud here, which is what I think is going to happen. In short, I remain bearish. I sold into the rally last Thursday with this bar right here because I told you that white bar right there, and then the black one that followed. I told you we could see a top. Try to go to this trend line and see a top and buy a few more days, but I think you're going to see a top soon. Again, breaking out to new highs, as I told you down here. I told you we were going to go make new highs. Why? This move was corrective. They needed a 5-leg push lower in order for that. That's why I predicted new highs. That's why I was right. But coming up here, I predicted we'd likely come to this trend line. We've overthrown this level, and I told you when we go up here to make new highs, we'll get a peak at some point and pull back. It is going, it's a breakout! Being very complacent, I told you we'd likely see a top develop that would be followed by another high once we get a pullback. Still think that we're going to see a peak, a pullback, and then I think you're going to go on and complete the final climax move here with the blow off top and complete the cycle top here. And again, 6,500, 66, 6,700 price, something like that. We're at 6,400 today. So again, I think that my target of the 6,500 to the 6,700 area is likely reasonable. That will take us towards those trend lines in the weekly time frame with SPY and the S&P 500. Reached a high of 6,400, 6,401 today, pulled off of that, closed at 6,389. Closing flat, giving back the rally, getting another black candlestick. I have the rising wedge here, and I've taken that from this low right here just to our recent bounce off the 20 period moving average. Trend lines do change, but if we just look at the one here that we previously had, we're actually back testing that one. Close for you. First, we have our rising wedge, and the blue trend line is our current trend line right here. Trend lines do change, but we're also back testing this trend line. I talked about this trend line from the April low to this low right here in June, and we broke that trend line, and then we back tested it, and then we went kind of sideways here, had the breakout, and now as we broke out of the sideways move, we're just straddling on the other side up against that broken trend line. And then we have the upper boundary of our rising wedge. So you have a couple of trend lines here. If we do attempt to go higher, that's major resistance right there. We may not make it. We did get another black candlestick today, and I think the time is short. Eventually, if we break the trend line, take out the 10 period and the 20 period and the cloud here, then you're going to move back to this other cloud in the 200 period as I talked about. The trend lines I'm watching, we're back testing one. We have a new trend line from these lows, the bounce off of the cloud here, 20 period moving average. Now, when we started to sell off, after the gap higher, I said, I bet you we're going to end up trying to get another black candlestick. Oftentimes you'll see a couple of them coupled together at a top. They get another black candlestick. We closed flat. Negative, the candlestick was red down at the lows, but because we closed just slightly above this level, but gapped higher, we got that black candlestick, the same thing we had back over here. Sometimes black candlesticks are associated with the top, hollow red candlesticks as we had on April 7th, that was associated with the bottom. This candlestick where I tried to short when we had the divergences that formed that peak that gave us a sell-off, forming a larger divergence, that gave us our sell-off today, if this high holds or not. Divergences that have formed on the intraday chart. Regardless, we have another black candlestick to be paying attention to. The S&P daily. NASDAQ 100 was up 0.36%. It did go higher, gapping higher. It got a hollow red candlestick closing above the open. Sorry, not a hollow red, a spinning top candlestick, pardon me. I was talking about the hollow red at the 7th bottom. A spinning top candlestick, candle of indecision. We got one over here, but it was a continuation. I talked about that possibility. Had the black candlestick there. We did get another black candlestick on the S&P, but not on the NASDAQ. This is a candle of indecision. It could mark a top and a turning point or a continuation if we try to go to the upper boundary of those rising wedge patterns, which is still possible. As I told you, these black candlesticks over here, we may see a peak. It is a continuation pattern in a couple of days. Here we are a few days later. We could see a peak. NASDAQ daily chart. NASDAQ has that divergence. On the RSI, we have this rising wedge. We're at the upper Bollinger Band. I try to make it up into this level here. Got a lot of things to digest. The earnings, the Fed, Trump's tariffs, the GDP, the inflation data with the PCE. A lot for the jobs report, a lot for the market to digest. Watching to see what happens here. At that upper Bollinger Band right now for the NASDAQ. Let me show you the upper Bollinger Band on the S&P. By the way, I think that NASDAQ is in wave 3 as well, primary wave 3. I think we're either finishing it or about to finish it. If we can try to go a little higher, you got another shot at a top here with the candle of indecision. And then I think you're going to pull back, hit the wave 4 towards the 200, and then you're going to get your final push higher for wave 5. I think you'll see a market top likely in September or October. I wanted to bring up the Bollinger Band again, and again, I've talked about how, again, you could tag this level or close above it. We may go higher if we go to that upper boundary of the rising wedge. That's still possible, but it's also possible that we just slightly above it here and then turn down off of it. We actually closed right back below it after closing above it there on Friday. The Bollinger Band currently is at 63.94. We closed at 63.89, a few points underneath that level. So again, do we see the black candlestick mark a turn, or do we make it up to that upper boundary? I am looking for a top. As we went sideways, we could see another reference point of a divergence on the MACD and the RSI can get it. Awesome oscillators I've talked about. But the Bollinger Band's tightened up. So again, a short squeeze is coming, but oftentimes you'll get that short squeeze and then you'll begin to move in the other direction. We'll be watching this closely. Sometimes you tag these upper bands or overthrow them and then begin to turn off of them. I think is very likely. We'll see what becomes of this black candlestick. Use the rally to increase the size of my short position. Previously, I had a tighter stop on because I knew that this could possibly happen. Now I'm building my position as we get this rally, and I think we'll get the sell-off, we'll get the rug pull. It'll go, what happened? They always do. I'll show you these upper Bollinger Bands. NASDAQ, again, tagging that upper band. It's rising right now. Again, if we can get back above it, you might go to the upper boundary here. But if we end up getting rejection tagging it, then again, we could break down. Regardless of which way it plays out, I think you're about to top. And I told you I'm looking for a top. I have not yet called one. So my long positions into the rally last week began to try to short the market. Last Thursday got stopped out, set my position on Friday, and then added to it today. So I remained short with NASDAQ and S&P 500. So again, possible we see a turning point based on the divergences that I'm seeing. Play this divergence on Thursday, got stopped out on Friday, reset the trade towards the end of the session near the highs at Friday's session, went a little bit higher and added to my position. We have this multiple point divergence. May not be done. We still may go higher. Still possible that we go up to that upper boundary, but I'm telling you, I'm looking for a top and I'm speculating because I think the rally is likely coming to a conclusion. This is a divergence that I'm playing Friday and Monday right here with the one on the 60-minute chart. Again, it may not be done yet. We'll see what happens with the GDP, the Fed, with earnings, with the tariffs and all the rest of it, with the inflation data. A lot for the market to digest this week. With this divergence on the 60-minute chart, we went sideways from the July 3rd peak. I told you I was looking for the opportunity to play the divergence, and I told you it's likely not done yet. We got another reference point right here. Seeded that here. We have this divergence in the most recent price action. If it's done, it could mark a turning point. I do think you'll get the pullback, but like I said, my signals, which are correct, remain bullish. Well, I'm speculating on a divergence. Divergences in the daily time frame. Signals are still bullish. Momentum has not yet changed. Trend signals are still bullish. So I keep saying we could still go higher because of these divergences. Closed out my long positions last week, and now I'm speculating on the short side. I'd be completely wrong in taking my short positions prematurely. As I've said, I'm not recommending anybody buy or sell anything. I'm telling you, I'm looking for a turning point here. Risen 32% since I've called the day of the bottom. I caught most of that move. Why, again, I closed my longs looking here to speculate on the short side. We'll see how it plays out. We pull back here. I'm going to flip the trade back to bullish and ride it up for the final climax high. I'm playing this divergence here, large multiple divergence in the most recent price action. Taking my position on Friday and Monday, I could be completely wrong. The divergence may not be done yet, but again, the time is likely short. I'm doing the same thing on NASDAQ, again, speculating on the divergence. A tight stop in on Thursday. Reestablished my position on Friday and added to that on Monday. So again, this divergence may or may not be done yet. You could see the multiple point divergence. I've got a loose stop on my trades this time. If it's done, we're going to see a drop below the 50 period, below the cloud, below the 10 period in the daily time frame, and start seeing these divergences play out. We'll be watching this closely. 60-minute chart of the NASDAQ.